Hey everyone, and welcome back to the Your Money Your Life podcast, episode 156. Of course, before we even get into the episode, wherever you're listening, make sure you 5-star rate, review, like, and subscribe to the podcast. And this podcast is special. This podcast is brought to you by Cozy Earth. Ladies and gentlemen, Valentine's Day is coming up. So look no further than to Cozy Earth for your luxurious loungewear and pajamas. And they're perfect. They're perfect gifts for the holidays, especially fellas, out to the women. There's perfect gifts there, fellas, for you to find for your woman on this upcoming Valentine's Day. Guess what? Cozy Earth has elevated basics and they're made to last. They have a variety of styles and colors. They have loungewear for men, and it's made natural, breathable. I have a pullover that they gave me. I'm going to wear it on the next episode. It's great. It's soft. And Cozy Earth's menswear line offers all seasons, so it's versatile and it's perfect for laying in the colder months and worn on its own during the warmer months. Cozy Earth unique fabrication provides the next level comfort and four-way stretch technology in all menswear. So ladies, if you're looking something for your man as well, please check out cozyearth.com. Again, cozyearth.com. And guess what? Do me a favor. When you go to cozyearth.com, make sure for my Your Money Life listeners, Cozy Earth has provided exclusive offer. So go to cozyearth.com. And when you're checking out, you'll be able to use the code YMYL. Yes, Your Money, Your Life. Use the code YMYL for 35% off on your Cozy Earth loungewear, your Cozy Earth gifts. Make sure you use that code. Now let's get into the episode. So, folks, a lot going on this week in this episode. We'll first start with a market update. Big things moving and shaking in the market right now. We just got GDP numbers. So we'll go over them. So U.S. economy expanded at a 2.9% annualized rate in the final 3 months of last year, which is slightly lower than the prior quarter, but still above the pre-pandemic level. So 2022 ended, a little bit better than most expected. Remember, we had a couple of dips in quarter 3 and quarter 2 of 2022 that were negative GDP. We were negative annualized rate, but in the end of the quarter, it actually ended up being higher. So personal consumption grew. But personal consumption grew less than expected at 2.1% last quarter. So that was because of falling retail sales in the final 2 months of the year, also pointing to slower growth. But, you have different factors playing into why things were slower in the fourth quarter. Of course, rising rates, inflation, all these different things playing into it. But hey, it's actually a growth, which is better than expected, right? We expected, a lot of people expected recession in this year. So seeing that we had GDP, which is a barometer looking at the overall growth and production of the U.S. economy, and we're showing a positive annualized rate is actually a positive thing. And the markets are reacting in kind, right? And so I was on CNBC yesterday and talking about what to expect for the next couple of quarters, couple of months. Yes, there's going to be a volatility, but I think there's a prime, there's opportunities for upside right now just because of you have a GDP better than expected. You're seeing layoffs, so companies are restructuring their cost. Demand is going to be weaker, but it may not be as weak as people are expecting, right? And so all those factors play into a combination of better than expected upside and potential returns for investors right now. We talked about this, the ability to finally see some positivity in the market, and those things are starting to show here a little bit. We even saw Tesla shares pop. They had better than expected earnings after the stock's been pretty crushed as recently, but it's up 9-10% this morning here. It's really a missed sentiment. They cut their prices heavily because demand is softening, and they tried to spark demand by cutting prices, and it worked a little bit. They have strong orders year to date, and they're seeing twice the rate of production as China's reopened and different areas have reopened. So that's what they're seeing on their front. You're also seeing, just in general, again, we talked about the layoffs and mass, and they're still happening. It's trickling just past tech, and it's now going to other companies. You're seeing a rash of other companies start to perform layoffs, right? So tech, of course, I'm talking about other different companies. Wayfair did layoffs. So they're right sizing, their cost structure and taking those layoff charges to kind of bring earnings back to what they think is amenable for them based on demand right now. And so you're seeing that happen over um, all over the board, all over the board right now. And so you'll probably see that more. It's probably more into spring before things will kind of right sides at that point. So big tech, speaking of big tech, Amazon just unveiled a $5 a month unlimited med subscription as they're getting into the pill delivery. Pill delivery, it sounds weird saying that, but they are getting into pill delivery. So Amazon is actually going to be allowing people to have a subscription, a new prescription drugs service that Prime members can now buy unlimited meds and get them delivered to their doorstep for a flat fee of $5 a month. No insurance necessary. It sounds like an ad, but I just am looking at it. It just sounds interesting. So Amazon bought, it's not an ad, but Amazon bought PillPack for $750 million in 2018. And they splurged on $4 billion on membership-based health clinic, One Medical last year. So they've been trying to get into the healthcare space, and they've been investing heavily in that area the last 5 years. And PillPack so far, only 14% of prescription customers know about Amazon's PillPack online pharmacy, but a third say they plan to switch. So this is an area where big retailers are trying to get into healthcare. It makes sense. If you're getting everything else from a retailer, from your groceries, why not get your healthcare from them? So big move by Amazon. More big tech news. Microsoft, they said they reported slowing growth and a rare profit drop, but it's still investing billions. So they kicked off the big tech earnings a couple of days ago, and their shares spiked after hours, but then kind of leveled off. But their growth is obviously in all these big tech companies. Everyone's looking for the growth in cloud, and for Microsoft, that's that Azure growth, which was slower than expected. But obviously profits also dipped a little bit. But they right side, they did slashing to 10,000 workers as well. So these are companies that have said, hey, we grew too much during 2021, too much and too fast. Maybe it was too fast during 2021, the FOMO that occurred during there. And now they're trying to right size their balance sheets, right size their company cost structure. And that's happening across the board. And we'll still continue to see that. So much there. And more big tech news. Big banks plan a digital wallet to rival Apple Pay. So there, you guys seen Apple Pay. I actually use it pretty much every day now. I don't know if anyone else uses Apple Pay. I have all my cards kind of in there, and I just rather use that and just press a button twice to use my Face ID rather than fumbling with cash or pulling out a credit card. So much easier. The big banks are trying to force a launch of a digital wallet that could rival Apple Pay and PayPal and allow their 50 million plus cardholders to check out online without grabbing their plastic. So banks have teamed up on this before. They did Zelle, which was a way to try to stop these other fintech payment platforms or at least get some market share. And now they're trying to do the same thing with digital wallets. And that's interesting. I think you're going to see. We'll have to see how that splits, how that market splits, because I think Apple Pay has a pretty good hold currently, and it's just easy with the phone, right? And the Apple could potentially block these other people if they wanted to, or else they might get sued for doing so. But we'll see. Genesis. So Genesis is a crypto firm, and they're filing for bankruptcy as well. They were a crypto lending firm, and they did other things as well. But they're part of the DCG. It's a crypto conglomerate, and they declared bankruptcy last week. They're planning to restructure in May, and the goal is breaking itself apart and sell pieces to repay the creditors. There are plenty of creditors, so they had Gemini, which was a creditor of them as well, and so they're breaking up. They're filing for bankruptcy, and they are getting out of the crypto game. It seems like a lot of people getting out of the game, man. It was a crazy time. But what is interesting, we're talking about the labor market in different areas, but apparently small businesses have been going on a hiring spree. They're the ones that are, smaller businesses have been adding on people. Firms with fewer than 250 employees have taken on 3.6 million more workers than have been laid off or quit, according to the Wall Street Journal. So they're hiring. I think it's a tight labor market, and actually finding good work right now is super, super difficult. So it looks like some of the small businesses are looking for pockets of laid off workers. Good talent sometimes gets laid off. And they're hiring up these people, and really just putting a lot of people to work. That's why the labor market, again, super, super tight. Unemployment rate is super low, which is a good thing. And you're seeing people get snapped up pretty extensively. So roundtable this week would be pretty quick. We're going to talk a little bit about what I have going on this weekend. One, I didn't talk about football last week. I forgot to, but was super right on my picks. I had 4 picks, knocked them all from spreads to money line, meaning picking the winner. And of course, for people that are non-sports, you can tune this out or tune in. Actually, you should get into it. But sad the Vikings lost a couple weeks ago. Forgot to talk about that. But this week, you're hearing it from me first. I think I'm riding, Eagles for sure, and I haven't picked the other game. I think the Eagles got it, and I haven't picked the other one. But I'm having a super busy travel weekend with some different things I have going on. So the roundtable will be short and sweet. And there was, something I want to talk about is sticking to your own and doing things and building a community, which we've done here with New Street and New Street Advisors. I had a firm, a finance firm, reach out to me. They wanted me to pretty much do something for them for free. And I guess I haven't been on my rants and talked openly about things as far as things that go on the background, because it did a lot of great things. But one thing I'll say is, if these people that try to reach out, I think they don't understand what I've built or what we've built, in the sense of I don't want any validation from like any mainstream or other people that are doing things, right? They wanted me to post, and they said they have some platform where they're going to they'll be able to have credibility from me being on their site. There's no credibility for me being on their site. They're not even a big platform. They don't do anything. I don't even know, no one's really heard of them. But the point of this all is, this is not for me. What I built is not for validation from other financial professionals or other people. Don't need it, don't want it, never have. That's the reason why I left corporate America. Don't care to have it. And normally I have to do something for free. If I'm talking, it's because I want to talk, or I'm getting, compensated to talk. And those are the reasons why. But if you're out there and there's people that want you to do something for free, thinking they could, put you on a platform that's not even an important platform, make sure in 2023 you ask for what you need, and you kind of be able to say no, and to people that especially just culture vultures, not really out there doing anything that's important. You want to stay away from some of those and focus on what you got going on, man. Motivate yourself in 2023 to really get after it. And take risks as well. Take risk where there's needed to be take risk. Partner with and work with the right people. I have great partnerships when it comes to, platforms like CNBC. They've been great, working with them for many years, and the partnerships we built, the great people that work there, from the producers, assistant producers, bookers, talent coordinators, other contributors, great partnerships there at CNBC. So I'm grateful for that. So that was just sort of side. I'm going to figure out what I'm doing, because next week I will be on vacation. I will finally be on vacation. So I'm trying to figure out if I'm going to give you guys a little short pod that week, even though I will not be in the country. But I probably will give you guys a short pod. So stay tuned. Probably recorded earlier. I will be gone next week. Got a lot of things coming on. When I come back, fully come back for a full episode, things will be different. I'll explain when I see you guys on that episode. We might even have a guest on that episode. We'll keep it cracking and we'll keep it going. So I appreciate all y'all for listening. Of course, like you do every single week, make sure you share with your family and friends. Make sure you get that Cozy Earth gift I want you to post it, send it to me, the Cozy Earth gift you got with the YMYL passcode, 35% off. Send it to me. And we appreciate you for listening, and we'll talk next week.